Hello there, Nick from Nick's Investment Lab, and today, LIRAs, or locked-in retirement accounts. So a locked-in retirement account is a special type of RSP, which you may have if you have left an employer that offered a pension plan and then chose to retain those assets rather than allowing them to stay within the pension plan. Now, pensions are intended for retirement purposes. So to prevent people from simply withdrawing them, LIRAs have certain provisions in place which restrict the withdrawals and further contributions of funds. Admittedly, I have seen many clients get frustrated over this over the years, specifically because it's
my money. I've contributed it. Why can't I access it?
And the reason for that, not to be unsympathetic, is because that's not what it was intended for. This money was intended to be put into a pension and for it to be withdrawn in retirement or at an appropriate retirement age. Most pensions, or most pension plans rather, most LIRAs, enable you to start withdrawing funds as early as 50, but generally closer to 55. So why am I being so wishy-washy with specific ages? Interestingly enough about LIRAs is not only do they have a general rule, kind of like most accounts for federally, but they have provincial legislation. So for example, if you worked in BC and your company was registered as a BC pension, then if you were to leave and transfer your money out into a LIRA, it would have to go into a LIRA with a BC legislation. I have seen clients that have multiple LIRAs because they have different pension legislations, meaning they can't be held in the same account. To further complicate matters, one of the provincial legislations is actually called federal. So go figure. How does growth work inside of a LIRA? Just like every other investment type of account. You can invest the money in a GIC, you can invest the money in mutual funds, stocks, bonds, whatever you prefer. Taxation is very similar, identical to an RSP. You pay tax on the money when you withdraw it. So all that time growing up until then, you don't have to worry about any tax implications. So when can you start to take payments? As previously alluded, generally this is going to be somewhere 50 or 55, depending on your provincial legislation. To start taking payments, you can't just start withdrawing from the LIRA at will. You actually have to do what's called a conversion over to a LIF, or a life income fund. At this point, you will have an annual minimum as well as an annual maximum that you can withdraw, both of which are a percentage of the value of the account. For many legislations, at least Alberta and federally for sure, you are actually able to unlock 50% of the value of your LIRA at the time of unlocking. So what this would look like, let's say you have a $200,000 LIRA and you are age 55 and you want to start taking payments. You can do a LIF conversion. So you take your LIRA, this is where it's going to fork off. So you have your LIRA and it's going to go half into an RSP, half into a LIF. So the $100,000 into each. If the reason we would do this is, as I alluded to previously, there is a maximum that you're allowed to take out from a LIF. When you convert your RSPs, they become a RIF, and like the LIF, there is a minimum, but there is no maximum. Hence why I like clients to unlock as much as possible, because this gives a lot greater flexibility. The minimums and maximums are a percentage, and they're based on two factors. Number one, the value of the account as of December 31st of the previous calendar year. And number two, either your age or your spouse's age. Once again, kind of strange, but you can choose to either use your age or your spouse's age to have varying percentages. The older you are, the higher your percent is. So in certain circumstances, it could make more sense to, if you have a younger spouse, to use their age so that the amount that you have to withdraw is actually lower. So once again, if you're still working, you're not adding on a higher amount to your taxable income. Could work the other way as well, where maybe you have an older spouse, but you want access to more of the money. You could use their age rather than your own so that you can actually withdraw a higher percent of the funds. One last quirky note around minimums and maximums is that, once again, these are percentages, and a percentage of $1 is still a percentage. So to avoid this account being stuck as a LIRA or a LIF indefinitely, and let's say it gets down to $100 and you're taking an annual payment of $10, to prevent that, they have what's called small amount unlocking rules, which enables you to withdraw the remainder of the funds, whether it be in cash or to transfer them non-taxably into an RSP or a RIF. If you are under 65, it is 20% of the yearly maximum pensionable earnings, or if you are over 65, it is 40%. And yes, for LIRAs that are small enough, I have seen circumstances where people do a 50% unlocking and then proceed immediately to do a small amount unlocking as well. So that definitely is a feasible option, not necessarily for everybody though. With that said, there are certain circumstances such as shortened life expectancy and financial hardship where you can withdraw some of the funds, if not all of them, from your LIRA early. So don't take this as a one blanket rule where your funds are locked in until 50 or 55. If certain situations prevail, you can get access to those funds. With this all being said, I don't necessarily think that everybody should transfer their locked-in pension funds into a LIRA. If you are to retire shortly before retirement, chances are you're probably best off leaving your funds in the pension plan. With that being said though, nothing is a one-size-fits-all, and there's often a lot more nuance to each of these conversations. So I will always recommend that you reach out to a financial professional. I myself am a licensed CRO advisor, investment advisor, and hold a financial planning designation. So once again, if you have any questions, I'm happy to answer them. investmentlab@gmail.com. Additionally, please like, comment, subscribe, and follow our channel for future videos and more information about a variety of different types of accounts and different types of products. As always, thank you so much and have a wonderful day.